From Columbus, Ohio, this is the Get Business Credit YouTube channel with your host, Josh Van Horn. Subscribe now and hit the bell notification right now to stay up to date as soon as we release new business credit gems. Take it over, Josh.
Hey, what's up? It's Josh with the Get Business Credit YouTube channel. So in today's video, I'm going to be going over what is hard money. Reason I'm covering this topic is there's quite a few subscribers asking about real estate business and hard money loans, funding for rehab, fix and flip houses. I'm not an expert in it, but I have a little bit of background in it from the past, so that's what I'm going to be going over in this video. So if you're not already a subscriber, please hit the subscribe button below. I'd really appreciate it. And turn the bell notification on. If you like this video, smash the thumbs up. Really appreciate it. So I'm going to try to make this video not too boring and easy to understand, but it can be a confusing topic. So I do want you to make sure that you, for one, listen throughout the whole video and do your own research as well. There's tons of content, other YouTubers out there that put out a lot of good content about hard money lending. I don't know everything about it. I have a little bit of background in it, so that's why I figured I'd cover this topic. So without further ado, let's get into it. Excuse me, I still have a little cold cough. So what is a hard money lender? A hard money fix and flip loan is a type of real estate loan which a borrower receives the funds secured by real estate property. So this can be a house that's, needs a lot of work or just needs a little bit of work, like remodeled kitchen. It needs a new kitchen remodeled, new roof, things like that. So hard money loans are typically issued by personal investors and fix and flip focused hard money lender companies. So there's tons of them you can type in on Google. In today's video, I'm not going to really endorse some lenders that I know. You can shoot me an email at info@vanhornmarketing.com, and I'll try to guide you through the process and some, I don't want to say recommendations, but a few that are pretty well known out there. But you can just Google yourself too. Hard money lenders in, say, Ohio, hard money lenders in Florida, Texas, whatever, and whatever your situation is, if you have bad credit or, 100% financing. So I don't want to ramble on too much. So anyways, most people that rehab and fix real estate properties that are rehabs, fix and flips, believe it or not, even if they have good credit, and they have plenty of money in the bank, they're typically using hard money lenders. They could have $1 million in the bank and they're still using hard money lenders. There's a reason for that, is because you want to kind of spread your risk out, leverage the money as well. Don't put all your money in basically, one investment. Don't tie that money up when you can use other investors, hard money lenders, money to fund the deal for your fix and flip. So this could be a single family home or a multi-family home, like a duplex or 1 to 4 units. Typically, if you're a beginner, most lenders don't really want to lend you money if you don't have experience in the past. So you kind of have to stick with the duplexes or the single family homes. So let me go over to the next slide here. Sorry, I'm new to using this slideshow. So the benefits of hard money: low personal capital needed, meaning with traditional banks, say you want to buy a house, it's worth $200,000, and you can get a good deal on it for, say, $200,000. It's worth $250,000. Or a traditional bank like Chase or a mortgage company is not going to give you the loan for that, unless you're going to put down the typical needed amount. And that's, anywhere from 3% all the way up to 20%. And it's hard to find good deals in the fix and flip, on the MLS. It's hard to find good deals out there, that a traditional bank or mortgage lender is going to actually finance for you unless it's in good condition. So those are harder to find. So with hard money, you have, you don't need as much money as traditional financing. Not to say that you don't need to have money in the bank, but you do, but not as much as you may think. And everybody's situation and the properties are different, so second is leverage your income, your capital. So meaning like, don't say you have $100,000 and you found a $60,000 rehab house and it needs $20,000 worth of, construction cost or new roof, kitchen remodeled or whatever. It's going to cost you $20,000, and then you're going to pay the commission to the, real estate agent. You're left with only, $10,000 to $15,000 profit, and then you got to pay taxes on all that as well. And it may sit on the market for a while. So you don't want to put all your, eggs in one basket. Leverage your income. So don't spend your money now on property. You want to show that money in your business bank account, your personal bank account. You want to show that to the hard money lender, even if you're new to, hard money lending and new to real estate investing. Also, the benefits of hard money lending is low personal risk. There's still a risk to a certain degree to you as the borrower, but it's so the cats are fighting. But there's not as much risk as, say, a traditional loan through a mortgage lender, because the hard money lender can just foreclose on the house and take it from you, and they're not, there's not a lot of risk for them because they're not loaning to you the market value. So the next thing is high credit score not required. So this can be, I would say, not all lenders are the same on hard money lenders. I've seen ones go down as low as like 580 FICO score will approve you. You just have to have more money down, and you have to be able to show some type of experience or business plan on the property that you're going after. But you don't need a credit score of 750. I would say you want to be in the credit score of 620. But if you get into, say, your credit score of 680 or higher, then you're going to be paying a lower lower fees with sorry, the mic was cutting up there. Origination fees and lower your annualized rate. So sorry, I can't talk today. Too many things going on today. The other thing that's good about benefits of hard money is you use other people's money to fund the deal. Bottom line is, if you only have $5,000 to $10,000 in your bank account, you can still, if you find a good property, you can still get a hard money lender to loan to you, as long as there's money to be made in it, in the deal. And the hard money lender is going to, decide that based on the address and the information you give them. The other thing that's good is there's thousands of hard money lenders out there. Like in every state, there's, hard money lenders everywhere. You just have to know where to look. Some of them have different requirements. Some of them require, the house to be at least, or the loan to be at least $75,000 or $100,000. And they'll even finance part of the rehab cost or all of the rehab cost. The other thing that's good about it is even those with bad credit can get a hard money lender, just like, or hard money loan, just like I just said. So what are the requirements for a hard money loan? So most hard money lenders are going to require you to have an INC or a LLC, because that's, they don't really want to do a personal deal. It's easier for them to, I don't want to say foreclose, but if you, default or whatever and don't get the property sold in time, it's easier for them to foreclose, if you have an LLC or INC, and you need a EIN, IRS, taxpayer, federal identification number. So you don't have to be in the real estate business, or the LLC or your INC doesn't have to be a real estate company. It could be, say, a marketing company or a logistics company or whatever. And it can be new or already existing. That's just what the lien and everything's going to go under when you go at the closing. So you want to have at least 3,000 to 5,000 in the bank. More the better, because you're going to get better choices as far as lenders and lower rates. The more money you can show that you actually have in your business bank account, they're going to want to see either your personal or your business bank statement last 3 to 6 months. If you don't have business bank statements, but you can show personal bank statements, they will accept those too. The credit score, you usually want to be around 620, 660 to 680 is best. Some hard money lenders will loan to somebody with under a 620 FICO score, just like I said earlier. It really comes down to the deal, the property. You bring them and say that this is the property, and if you can get it really cheap and it doesn't need a lot of work done, or even the work is extensive work, but the after loan value ratio is high, or after rehab value, I should say. There's two different terms they use, is the RVA, and that's basically stands for after rehab value. And there's also LTV, loan to value ratio. Basically means kind of the same thing. I know I'm all over the place and maybe confusing you, but I'm just trying to keep it real and be myself. So it's best to show some prior real estate flipping experience, or even if you don't have that experience, then if you're a carpenter or you have construction experience, that can go a long way as well with the lenders, because they want to know that you know what you're doing, you have a plan, you're not just getting into something because you saw a TV ad or whatever and just thought you could make $1 million quick flipping properties. There's more to it than that. The main thing is find a good deal, real estate property. As the hard money lenders, 80% of what they're looking at is the property, not so much you and your credit score or how much money you have. 80% of it is the property that you want to get the loan on. So that's the lending amount and the after rehab value. So to make this simple, I would say like after rehab value, loan to value ratio, it's a $100,000 house you found, or I should say it's worth $100,000. The comps in the area are $100,000, and say you found it on Facebook for $40,000, and it needs a total rehab from the roof, walls redone, painted, new kitchen, all that. So you want to get with a contractor, get an estimate, see how much that's going to cost to do that work. It may be like $30,000. So then you got 40,000 and then 30,000. So that's 70,000. So that's a good deal. So typically you could be earning, anywhere from $15,000 to $20,000 profit on a deal like that after your origination fees and the annualized rate that they're going to be charging, the lender's going to charge you. I don't know why, but I keep stumbling over my words for some reason. Okay, hard money lenders and down payments. So most hard money lenders require money down, although there is a couple out there that do not require money down. If the deal's good enough, they'll do 100% financing, including all the closing costs. So there's only a couple out there that do that, but there's a few out there that will do that. But most of them are going to, want some money down. So most hard money lenders will take a look at your credit score, your experience, and maybe a few other factors, and then they're going to calculate your down payment from there. Most often you'll be required to front about 10 to 30% of the deal. But if you find it, like I said, if you find a really good deal, some of the hard money lenders out there will require no down payment or very little. It all comes down to, like I said, the property. If you find a really good property, especially if it's not on the MLS and, it's in distress, but, the values and the comps are really good in that area, the recent comps, then, there's profit to be made. The lender is going to see that and they're going to be willing to loan to you regardless. They want to make money. So if you take the property address to one of the hard money lenders and they come back and say yes, they will, underwrite that, they'll do that loan. That's a pretty good sign that you have found a pretty good deal on a house or a property, because they're looking at more data than you think, and they're looking at the most recent comps. Excuse me. So let me get back to this because I put the notes down here. So like I said, it all comes down to the property. Find how much you can close on it for. So that's how much you're going to be able to negotiate with the seller of the house, whether that be a bank or whoever owns it, and then the cost to repair it. So that's the rehabbing the property, and then the recent property comps in the area. So that's how they will come up with the LTV, loan to value ratio, and the ARV, after repair value. So this tells the lender and tells you if the property is a good deal and the level of risk that the lender and you will be taking. Hard money lender rates. Every hard money lender charges different rates based on all those factors that I was just discussing above. But the main reason why the name is hard money is that hard money lenders take on a greater risk, so they charge a lot more than traditional banks. But they charge, a lot more than traditional banks, say like a FHA, 3% or whatever. That's not going to be the case with hard money. And also hard money is short term, meaning like 4 months to 12 months. You need to get the house rehabbed, fixed, and sold within like 4 to 12 months. The longer you keep the property, even if it's already rehabbed, you're still going to be paying on an annualized rate anywhere from 8% to 18%. So if you have experience or you have good credit, then most of the hard money lenders will lend around 8% to 10% or so. But if you don't have any experience, then you're going to be closer to like 15 to 18%. So that's the average annualized hard money lender fee that you're going to owe. So that's divided over how many months you have the property from the time that it closes to the time that you get it sold after you flip it. So they also charge a 2 to 3% or origination fee. I don't know why I'm having a problem saying that word today. This fee covers the hard money lender's fee. So that's basically the back office, their staff, their underwriting, doing the research, checking out the comps in the area, appraisal. So that's how they make their money. So like the 8 to 18% is like the private money investor. That's how they're earning their money and weighing the risk. And then like the 2 to 3% fee, those are also called point fees. Those fees are also like annualized over the term of the loan. But those fees basically cover or I should say the lender's underwriting process, and you're basically paying them to get all the research and everything done for you, so the loan goes through, quickly. Also with hard money loans, on the closing process, it can be done anywhere from like 7 to 14 days. So it's not 30 days or 45 days like, the typical closing times with traditional mortgages. So just to kind of break this down, so expect to get the loan at say 80 to 90% LTV, loan to value ratio. So what does that mean? So if you have a $100,000 after rehab value property that you found, then the hard money lender is only going to give you 80 or 90%. So let's just use 90%. So the most they're going to lend you is 90,000. So if the house costs, say, 50,000, you can get it for 50,000. It's going to take 40,000 to rehab it. Then they're going to come up with some type of down payment. But a deal like that, you're not going to make much money on. So like I said, that's what they're going to be looking at, basically, the after rehab value. What is it cost? So how much can you buy it for right now? And then what is the comps in the area for the similar type property or home, in good condition or whatever, rehabbed? What does that go for? So if that goes for 100,000, then they're likely only going to give you up to 65,000. And so that means you have to do the rehab for like 15,000. You have to try to budget it in there for 15,000, because they'll let you do draws for the rehab cost as well. They're not just going to hand you the extra money just to go hire a contractor. They're going to want to see it in stages, say like plumbing, carpeting, flooring, painting, and they'll send somebody out to make sure that everything is being done that you're saying is being done before they're going to release the money. That's for the rehab costs, so. And I'll go through that in another video. This one, I just kind of wanted to cover the basic topics, and I didn't want to confuse you guys too much. So the most hard money lenders, they'll help you along the process, as they want to make sure that you succeed and you pay them back, and they don't have to foreclose on the property. So for those newbies, do not be scared away by them charging or owing a high entrance rate, because it's annualized. The quicker you move, the more profit you're going to make, less profit they're going to make. But some of them may have prepayment penalties, but for the most part, they just want their money back. Typically it's 4 months that you're going to be paying that 8 to 18%. That's if you do everything right, get it quickly sold. You're still going to be paying that, with most of the hard money lenders will have some type of prepayment penalty if it's earlier than, say, 3 or 4 months, because it's just not worth their time to loan you, say, $100,000 and them only make, $7,000 or $8,000 over a, total loan amount, $7,000, $8,000, and you flip and fix the house in a matter of 60 days or so. Like I said, do your own research and check things out. But if you're new and wanting to get into fixing and flipping houses, you can make money in it. And if you have bad credit or whatever, don't be scared away. You may have to start at the bottom and work your way up as far as how much profit you're going to make, because the entrance charges and the points fees that you're going to have to pay. But once you get that experience, the next flip is going to be easier, because you've already built up that relationship, and you can go to many other hard money lenders that may offer you better terms. So I think that covers it. I hope it wasn't too confusing for you guys. I'll try to make another video that covers some actual direct lenders that I know of. I just don't want to endorse anybody right now directly, but feel free to email me at info@vanhornmarketing.com, and I'll answer any questions if you're wanting to get into this business. Like I said, I'm not an expert in hard money lending, but I have a little bit of background in it and a little bit of background in real estate and real estate marketing. So if you guys have any questions, just put it in the comment section below and I'll respond, or just shoot me an email. If you like this video, please hit the thumbs up. If you're not a subscriber, please subscribe. I appreciate all the support. Thanks so much, guys. Until next time, bye.